Good morning. Before we start with cash flow statements, we must just determine what is the purpose of an income statement or statement of comprehensive income, what is the purpose of a balance sheet or statement of financial position, and what is the balance of the cash flow statement. Now, the purpose of the income statement is to determine whether you made a profit or a loss for the year. You will record all your income in the income statement, whether it was paid or not. All the income will be recorded in the income statement. So if you didn't receive all the income before the end of the financial year, adjustment will be made to increase the income in your general ledger so that you can show the total amount in the income statement that you are supposed to receive for the year, although you didn't receive all of it by the end of the year. If you already received income in advance, then you will also make an adjustment at the end of the year, reduce your income account with an amount that's not for the current year, so that you can determine what is the income for the current year. And the total amount for income, whether it was received or not, will be recorded in the income statement. The expenses will also be recorded in the income statement. If you still have to pay expenses at the end of the year, the ledger accounts will be adjusted and the accrued expense will be added to your expense so that the total expense for the year will be shown in the income statement, although you didn't pay all the expenses. If you pay the expense in advance for the next year, then you will do a recording in your ledger account to reduce your expense so that you will only show the expense for the current year in the income statement. The purpose of the balance sheet is to record all your assets, equity, and liabilities. The balances in the assets, capital, retained income, and liabilities accounts are recorded in the balance sheet after the adjustments were completed. So if you created income received in advance or accrued expenses when you completed the income statement, you will show this as a liability in your balance sheet. If you created prepaid expenses or accrued income when you completed the income statement, you will show this as a current asset in your balance sheet. This is the financial position of the business at a specific point of time or at the end of the financial period. According to the accounting equation, assets equals equity plus liabilities. In the balance sheet, the totals will be written at the top, and the total assets will be equal to the total equity and the total liabilities that is written at the bottom of the balance sheet. If the assets don't equal the equity plus liabilities, it means that there's a mistake and you will have to go and look for the mistake. The purpose of the cash flow statement is to record all the cash that came into the business during the year or that went out of the business during the year. So that is the money that flowed into your bank account, all the money that you deposited in the bank, all the money that you took out of your bank during the financial year. This is a detailed record that shows how the cash and cash equivalents have changed from the previous year to the current year. So you will not show figures in the cash flow statement that don't cause a flow of money. All the entries in the cash flow statement will either show an inflow of money into the bank account or an outflow of money.